Hello everyone, welcome back to TechnoChart's YouTube channel, and in today's video I'm going to talk about 7 things that you have to remember before you start your algo trading journey. Now, what is the capital that you require to start your algo trading? Basically, you can sell one lot of straddle or strangle with around 1.7 lakh to 2 lakh rupees of capital. So, but do we start algo trading using that capital? No, unless you have a zero brokerage account after GST, STT, algo charges, etc. You will still not be able to make any kind of money because all your profits will go into these charges. So if you trade with 4 lakh capital and do 2 or 3 strategies also, you will be paying approximately 2 to 3% of your capital as your taxes, brokerages, different charges and all. Let's assume, or let us just calculate what are the calculations or what are the things that you have to remember before you start. Like, let's take that we have a 4 lakh capital and we run 3 strategies, time based strategies. These are without re-entries, or assume that we use 2 strategies with multiple re-entries. Now, brokerage that we have to that we pay is basically 20 rupees per side, and 20 rupees into 6 is buy and sell side equal to 120 rupees. And once you add STT, GST, turnover taxes, and etc., this will approximately come at around 100 rupees or so for the whole day. Now, brokerage per day of your capital would come at around 250 rupees or so. So, in 20 trading sessions, you are paying 250 rupees into 20, that is 5,000 rupees as your charges for the as your options trading charges. Now, after that, 1,000 to 1,500 rupees is approximately your algo platform charges. If you are using a third party app for deploying the algo, then it would cost you around 1,000 to 1,500 rupees for the running the algo. Now, let's assume that if you are not running the algo on a third party platform, but you have designed your own inbuilt system. So in that case, if you do not know coding, then approximately it will charge 50, your coder will charge you 15 to 20K for coding the simplest of simplest strategies. Then comes the cost of AWS, like the cloud services and etc. So in an all, if you can think that approximately this would cover your 15 months of trading, and this is your one time cost. But for any kind of upgrade and all, in case you are not in case you are not a coder, then you have to pay him regularly or whatever the terms and conditions of your service are. So as a beginner, I would suggest that you use a third party app for deploying your strategy, so that you do not have to think about the infra maintenance, about the infra RMS of the system and all, and about the cloud services. So personally, I use Quantiplier for deploying my algo, and I trade with I trade with around 40 lakh rupees of capital, and I manage some clients account around 20-30 lakh rupees as of now. So after that, let's assume that algo trading charges are 1,500 rupees per month. Your average brokerage is coming at around 5K. This is coming at around uh, one. Let's assume that 1,000 is your approximate charges for the third party app, and let's assume that 1,000 rupees you're basically giving for back testing and all for the back testing platform. So I use Stockmark as a back testing platform, and I do all kind of back testing here personally, and my results have been matching approximately around 80 to 90% of the time with the back testing. And that is the ideal expectation that one should have. You cannot think, or you cannot assume that your backtest will match 100% of the 100% with the real, because backtesting is generally done on 1 minute OHLC data, while we are trading real time, right, on the LTP data that we get. So if we run the same strategy, so we are getting around 6K, like 6K is the minimum. 6K to 8K would be the average charge that you have to pay for running the algo. Now, if you use Zerodha platform, then additional you have to pay 2,000 rupees for the API charges for the Zerodha. Now, this is an additional cost for a Zerodha user, but if you use like Angel Broking, IFL, Finvacia, or any other platform um, which does not charge API, then you can save this kind of money as well. So add even 2K to this, and this would come at around 10K. Now, this is the minimum charge that you have to pay any kind of for 4 lakh rupees capital. So on a 4 lakh capital, you are paying approximately 8 to 10K, that is coming at around 2% of your capital. Now, even if you manage to make 12,000 rupees, or let's say even if you manage to make 4% on your capital, let's assume you made 16k, then after all the taxes you would be only making around 4k to 6k, right? That is only coming at around 1 to 1.5%. But if you run the same strategy on a two lot, basically, so the capital required would be 8 lakh, your brokerage would approximately come at the same price, because for one lot you are paying 20 rupees, for two lots also you would be paying 20 rupees, for 10 lots in a single order you are still paying 20 rupees. Only thing that would increase is STT and GST, that would increase minor, and that but your profits are going to go double. So for on a 8 lakh capital, if you are making 5%, that is, or let's assume that you are making 4%. Here you are making 32k, but after reducing the 10,000 rupee charge, you are still making around 22k, right? Here if we remove the 10k, you are making only 1k, 1%. Here we are making, still we are able to make around 3%. So as you increase the capital, the cost of doing business would come down eventually, because as you increase the number of lots into the same strategy, right? So the backtesting platform link I have shared in the description below, and the execution platform link is also I've shared in the description below. Now if you sign up in stockmark using your mobile number, and if you use the same number in Quantiply as well, you can get up to 10% discount on Quantiply for running the execution for the same strategies. Right now you can run almost all of the strategies of stockmark on the Quantiply app, and I personally use Quantiply, and I've been trading with around 26 to 30 strategies personally in my account. So for me it has been working really great, and you can use the link in the description to start your account, right? So if you had operation cost only, it comes at around 8 to 10,000 per month in normal brokerage account. You can save this brokerage if you start using Finvasia, that is a zero brokerage account, but that you should be doing it on your own risk. Now ideal capital to start algo trading would be minimum 8 to 10 lakh rupees. That too, if you have zero brokerage account, then that would be ideal. If you use re-entries or multiple if you are trading with multiple strategies, like a lot of strategies, in a 20 rupees per order account, your brokerage would come nearly 1 to 2% minimum, depending upon the number of entries. Personally, the three lot strategy that I have shared on the Twitter, that is there the brokerage is coming at around 1% per month, that is around 8,000. So even if you use 4 lakh capital or 8 lakh capital, you have to pay the same kind of brokerage, because the number of lots are same. For the charges on the number of lots does not change. So this is an account, or this is a 7.5 lakh strategy that I've been trading it from more than 3 months now. So the live data of PNL versus backtest is also shared, and some of the live PNL accounts of my clients is also shared here, where you can see approximately 80,000 rupees is the return after taxes and all here in 3 months. And this is the live PNL data of backtest versus real. So here, as you can clearly see, in the month of June, the backtest showed minus 10,000 loss, and the real loss was around 8,800. So there was a difference of only 1,900 rupees. Okay, so that is what I wanted to say. Ki even if you add slippages and all, your data is not going to match 100% of the time with the backtest. Here in July, the backtest was 59,000. In the real account, it was 54,000. Basically, on one day, the stop loss was hit in real life, but it did not hit in the backtest, right? In August, the real data was around 20,000, backtest was around 18,000. So there was again a difference of 1,600. In September, the real profit was around 64,000 rupees. This is all pre taxes, and the uh, backtest profit was at around 68,000 rupees. Right. So this is on 8 lakh 7.5 lakh to 8 lakh rupees of capital. And you can, if you want to start your algo trading journey, you can use the link in the description below for the payment. The charges for the strategy are one-time charge for 5,000 rupees for the base 7 lakh basket. Now, if you have additional capital, then you can DM me using the number that is there in the link in the below. And yeah, so does algo trading require monitoring? Now, as we are using softwares and machines to trade, all systems all trading systems in the world would have glitch some or the other point of time, right? So you cannot leave the system unmonitored, and but that does not also mean that you keep on staring the system every second, right? So constant monitoring every 1 hour would be a good thing to start with, where you just keep on checking the system, whether the stop loss have been placed, whether the algo platform or whether your broker is working fine or not. Now, uh, even though you can fly planes on autopilot, we still require pilots to monitor the plane. Similarly, you still need to keep a check on the system if you are doing any form of trading, be it algo trading or discretionary trading. You just cannot leave the system unmonitored here. Now, some of the errors that you can encounter while algo trading are broker down, algo platform down, orders are getting placed but stop loss wasn't placed for some orders. Now, margin shortfall in case of special days when margin requirement increases drastically. So these are some of the live errors that we faced while we were trading, while we have traded algo. Now, this was a Zerodha OI limit where um, uh, in an option buying account, where I started option buying account, where some of my clients faced the issue of OI limit, and they could not buy the options in delivery. They had to buy it in MIS only. Now, this is one of the orders where orders stop loss did not get placed. The order got placed into the account. The stop loss did not get placed. Also, we were not able to execute or exit the strategies that were already placed. So we had to wait for the broker to get running, and it costed us a little bit. But yeah, these are the issues that you can get any point of the time, and it could be in any broker. So this is Zerodha, this is Finvicia, and there was one day where I had got a margin shortfall issue, where there was a slight there was only slight less margin compared to the margin required due to the sudden increase of margin requirement due to the event day or something like that, right? So these are the issues that we get, and we need to monitor the positions, and we need to close the position manually in this case. Now, what broker does Quantify support? So Quantify supports right now Angel One, Zerodha, Finvicia, IFL Securities. Now, additional charges, as I've mentioned, Zerodha charges 2K per month for the API, and no other broker charges for API. Finvicia is zero brokerage account, so you can save up to 1 to 2% of your capital as brokerage here. Now, what are the pros and cons of algo trading? Now, pros of algo trading are it would help you to minimalize uh, emotional trading. It allows you for backtesting. Basically, you can backtest a strategy and then deploy it, preserve the trader's discipline. So this means that you do not overtrade. You try to stick to the system, and you do not apply your brains into the market hours. Rather than you use your brains after the market hours to backtest systems or to develop new systems. Now you can trade multiple accounts using algo, because the machines are going to take or machines are going to place orders. So personally, I trade with around 4 different accounts at the same time. So orders get placed automatically into my account in all the 4 different accounts. If you want to start your algo trading journey, basically you can watch these 3 videos, for which I would add the link in the I button. So this is the first video that you can start with. This is the second video, and this is the third video. Also, I've created a playlist for algo trading. You can watch this playlist of options trading here, which can help you to start your algo trading journey. Right now, let's move on to the cons of the algo trading. So mechanical failures can happen, as I mentioned. Requires monitoring of functionalities. This is also a thing that I've mentioned, that you cannot leave the system unmonitored, and can perform poorly. So this means that you had backtested a strategy, but it is not performing into the live market due to some or the other logical issues with the strategy, maybe. But the strategy that I trade perform approximately 90%, have 90% of the results match with the backtested data. So yeah, now this is the last and one of the most common things, that what happens in real versus backtest. So instances, there would be instances where our stop losses are getting hit in the real life, but it does not get hit in the backtest, because the entry, there could be few minor points of differences in the entry price, or in basically in the backtest as well as the real. There could be instances where the stop loss hits in the live trade, but in backtest it doesn't, so that you get in that case you get a negative slippage. So let me show you one example where you can get a difference between the backtest and real. Let's assume that your execution platform has taken a price of 138 rupees and the backtesting platform has taken a price of 139 rupees. Now assume that you might have kept a stop loss of 50 points into this as well as 50 points. So your stop loss is coming at around 150, 188 rupees. Here your stop loss is coming at around 189 rupees. Now it could be a possibility, it could be a scenario where the price just touches 188.5 and reverses from that like this. So in this case, what happens is your real time data, the stop loss has got hit. But in backtest, has the stop loss got hit? Because your in backtest, it had taken 139 rupees probably, or let's assume 138.75. So in this case, it is not going to assume, it is not going to, your stop loss is not going to get hit in backtest. So your stop loss has, you have lost 50 rupees here, 50 rupees into 25 quantities of bank nifty. So you are going to lose approximately 1250 rupees extra here. But either in this case, you can see your stop loss might not have hit and it might have reversed and closed at around 100 rupees. So you have gained 38 rupees here in backtest. So this is where your differences would come in backtest versus real. Over a period of time, these slippages get nullified, and your real data will match with the backtest if you have a good execution system. And personally, I prefer stock mock as well as quantiply for my backtest and my real execution. Right? Sometimes strike selection could be different, which can lead to different PNL from the backtest also. So this is also a scenario where this is an advanced case where strike selection could be different when we use the closest premium range feature or closest premium feature on the platform. Right? Spikes don't get captured in the backtest as it's a 1 minute OHLC data, and hence you can get a different PNL as well. So once you keep in mind what happens in backtest versus real, then only we can proceed ahead. Ki, yeah, these are the things that are going to happen in real life, and I am ready to accept these scenarios where my backtest and my real won't match 100% of the time. Then only you should be proceeding ahead with algo trading. Now, the last and the final thing that I want to say is ideal expectation. Targeting 40 to 50% in should be your ideal expectation in the real time, in real life. And over expectations and underperforming will be more hurtful than under expectations and outperforming. So always take the worst case scenario and then try to outperform that, rather than optimizing the strategy for the best results and then not getting the desired results that you have seen in the backtesting. Expect 80 to 90% of the backtest results in real time, so that if you get better or if you get accurate result, then that is well and good. But if you not, your expectation should be around 80 to 90% of the backtest result. Now, yeah. So after that, I do have some option selling services. Now, if you are a trader who has a 10 lakh plus capital and if you are looking to automate your selling strategies, then you can contact me using the number 7674007938, and I would share the drive link for multiple uh, algo trading backtested data that I've shared with you all, option buying data, option selling strategies for multiple capital. And these strategies can be customized according to your own capital, be it 10 lakh, 15 lakh, 12 lakh, or whatever the capital that you have. If you like the video, do share it with your friends. And always remember, algo trading is not a holy grail trading strategy where you just click on a button and you start making money. It is not a money plant that you just plant and it keeps on giving you money. There would be phases of drawdown, there would be phases where you start uh, doubting your systems and all, but that is all a part of system, and only the people, those who survive that due period, are going to make much ahead in their algo trading journey. So thank you. Do sign up using the link in the description below, and yeah.